Welcome back to HDIN Research. Today we're peeling back the lid on a Japanese legend, Zojirushi. For decades, they've been the gold standard of your kitchen, but 2025 marks a massive pivot. They're moving from being just a hardware maker to a lifestyle solution provider. Is it a genius move or a desperate escape from a shrinking market? Let's dive into the data. First, the good news. Zojirushi just hit a record 91.1 billion yen in sales. That's enough to buy a high-end rice cooker for every single person in the city of Los Angeles. They've officially crushed their shift midterm targets early. But here's the kicker. This growth wasn't global. It was powered almost entirely by a surge in their home turf, Japan. Here's where it gets weird. Operating profit is up nearly 25%. They are making significantly more bank on every item sold. But look at the overseas numbers. They're down 5.4%. It's a paradox. They're winning the efficiency game but losing the global expansion race. The China chill is real, and it's starting to hurt their global footprint. How did they survive inflation? By going elite. Instead of cutting prices, they leaned into the Enbu Daki series, rice cookers that cost more than a high-end smartphone. They proved that if your tech is good enough, Japanese consumers don't care about the price tag. They successfully passed every cent of rising material costs directly to the customer. This isn't just marketing, it's physics. By boosting power to 1400 watts, the highest in their history, they created a tech moat. As this formula shows, when your technology is miles ahead, your profit elasticity stays high. You don't just sell a cooker, you sell the perfect grain of rice, and people will pay a premium for that perfection every single time. The real dark horse of 2025? Humidifiers. This category exploded by nearly 37%. Why? Because they took their steam heating tech from rice cookers and put it into air quality. It's a viral success in Japan and Korea. It turns out, people want their air as clean and controlled as their dinner. Check out this profit bridge. Raw material costs were a 45% headwind, a total nightmare for most manufacturers. But Zojirushi fought back with a 75% gain from price adjustments. They didn't just survive inflation, they weaponized it to improve their margins. That's what we call financial engineering at its finest. Now for the reality check. China's real estate crisis isn't just about buildings, it's about the wealth effect. When people feel their homes are losing value, they stop buying luxury rice cookers. Zojirushi is facing a structural slowdown in their biggest overseas market, and local Chinese brands are starting to eat their lunch with cheaper, app-connected alternatives. This is the elephant in the room, or should I say the elephant in Shenzhen. Nearly 100% of their major manufacturing is concentrated in one spot in China. If trade wars heat up or tariffs spike, Zojirushi's supply chain could be paralyzed overnight. They have until 2028 to move their eggs out of this one basket, or they risk losing everything. Efficiency-wise, they've walked into a trap. Their inventory days have ballooned to 151. That's half a year's worth of stock sitting in warehouses. While they have plenty of cash, nearly 30 billion yen, this mountain of unsold goods is a ticking time bomb if consumer tastes shift faster than their assembly lines. The roadmap to 2028 is called Beyond. They aren't just selling boxes anymore, they're building a digital ecosystem. By acquiring Linen Partners in Hong Kong and rolling out a DX digital transformation strategy, they want to hit the 100 billion yen milestone. It's an ambitious leap from a traditional hardware company to a modern tech player. Here is the scorecard for success. To hit that 100 billion target, they need to maintain a 9% operating margin and push their overseas ratio back up to 45%. It's a steep climb, but with a 50% dividend payout ratio, they are making sure shareholders are well fed while they make the journey. Zojirushi is also cleaning up their act. They've committed to a 50% carbon reduction by 2030, and, perhaps more importantly for a traditional Japanese firm, they're aiming for 15% female management. It's about building social capital to match their financial capital. A modern company needs a modern soul. So what's the verdict? Zojirushi has an unrivaled tech moat and a fortress of a balance sheet. But the China risk and high inventory levels are serious red flags. Our advice? It's a hold. Keep a close eye on their digital execution in 2026. If they can solve the supply chain puzzle, this elephant will learn to dance again. That's our deep dive into Zojirushi 2025. If you want the full-page technical report or a custom industry analysis for your portfolio, head over to HDINResearch.com. Don't forget to subscribe for more strategic insights. We'll see you in the next one.